stock of the day. Now, a number of AGMs today. It is AGM season, of course. Flight Centre among the company telling shareholders total first quarter transaction value is up 20%. The company saying margin improvement led to a strong first quarter profit uplift, and it sees FY24 underlying pre-tax profit to be in the $270 to $310 million range, and sees airline capacity as improving. So let's get into it then. And Andrew, let's start with you. Flight Centre, how do you view it?
Yeah, I mean, I'm always a little bit torn on this one because the CEOs are next to Wumba Boys, so obviously it sort of, goes up the rankings purely on that basis alone. Graham Turner, the former vet, before he started running those buses around Europe and London, of course. But it's obviously hostage to what occurred with the pandemic, and it's bouncing back. But as you also pointed out at the AGM today, they were still talking about capacity constraints. In particular from Australia back to Europe through the Middle East. So that's certainly a bit of a concern, and whether that's going to sort of abate. And obviously, again, coming back to your comments before relating to travel and certainly, if I can put it so delicately, the more mature people are able to afford to travel. But, with 12 or 13 interest rate rises, that certainly puts that discretionary spend out of most people's sights as such. So I guess we've always been pretty cautious on these sort of travel-like companies. Corporate travel's another one that we've been pretty cautious on as well. I note consensus is about $24. They're trading at around 19 at the moment, but certainly I wouldn't be viewing these as cheap. You're being asked to pay a P of around 20 times earnings. So even though consensus looks okay, it's probably not the right sort of sector relating to what's going on with consumer discretionary spending. Note the price is under a bit of pressure today because, as you said, they basically just met midway of consensus. So on balance, Andrew, I think it is a hold.
A hold, yeah. Price off around 2.5% at the moment. Shaun, how do you look at it then?
Yeah, I think in their presentation today, the wording was, I think they've played around with some wording and they were talking about improving margins. I don't know that their margins have improved. I think that the average sale has increased significantly and their margins are relatively consistent. I think that as capacity comes in, we've all heard what happened, the blow up with Qantas and Qatar, and the government apparently blocking additional routes. Eventually, there will be additional capacity added to our network, and that will bring a reduction in travel costs. I travel regularly, and it is absurd at the moment the amount of money it costs to fly out of this country and come back, and there just aren't any seats. You have to plan ahead, otherwise you can miss out. So I'm a hold at best. I actually think that they'll probably struggle, and I see a little bit of downside here. So I'm certainly not a buy. I'd be a hold to maybe even a sell or lightening of your position if you've already got some.
All right. Given that sector then, how do you rate that, particularly with the likes of corporate travel and Webjet, for instance?
I'm actually not. I'm not that bullish on this sector. I think what we're seeing right now is, as you said, the post-COVID effect. So we are at capacity. Ticket prices and sales are obscenely high. I think the cost per flight is going to come down, and with that, I think the earnings will come down for these companies. I wouldn't be buying any of them at the moment.
Yep. All right. Okay. So maybe just keeping Flight Centre grounded at this point. Okay. Let's